All right, traders, it's BA here with your nightly TTB report on January 2nd, 2019. Hope everybody had a good New Year's. Welcome back. I don't know what we're back in for, but it was another seesaw ride in the stock market. I swore the market off last night. I knew China was going to come out with some numbers. They always do on the first trading day of the year, which usually they release them about anywhere from 2030 to 2100 or so, on the night. So last night was when they released. I told my wife, I'm like, hey, I'm not even going to look at the market. I know the numbers are going to be bad. I really think the S&P could be down 100 points and the Dow over 1200, overnight time. So. But it wasn't quite that bad. I think they were down at 50 handles at one point. Probably the Dow was probably down 400, close to 500, I would imagine, at one point last night. They rallied all the way back, tried to close in the green, and then lo and behold, here we go again with another big sell-off. So we went about 70 handles up in the S&P, and then really just the market really accelerated to the downside. It's 4 p.m. Yeah, that was after the market hours, it really accelerated to the downside because of Apple. Huge sell-off spurred a lot of activity in a lot of different markets because of why Apple said that they're not, why the numbers were so bad. So anyway, big move down in the S&P. So we go back from 2520 and some change all the way down to 2470. Another 50 point just gusher in the S&P. And for a lot of you guys that haven't watched the market this close, I mean, you got to understand these moves that are happening in the course of an hour are moves that typically play out over 2 to 3 weeks, sometimes in the S&P. So these are just huge moves, and so I just want to put things into context. We're still setting records the way this market's moving. I'm not going to bring up any of the data points that my data cruncher's providing. It's all saying the same thing, that in 150 years of data that he has, he maybe has only seen stuff like this maybe 2 or 3 times, and the majority of that it's all coinciding with moves during the Great Depression, 1987 sell-off, or the worst of 2007, 2008. So anyway, S&Ps were, like I said, were knocked down hard. Let's take a look at Apple right quick. Let's go here to the after hours, go into equities, show extended graph. Okay, look at that drop in Apple. I'm going to quote you what they said. Apple cuts forecast, citing weak China sales amid the trade tensions. So nobody really knows what's going to take place in all of this hoopla for the trade tensions. It is drug out forever. It's crushing everybody, and companies are starting to feel the brunt of it. They're going to start reporting, and if this thing doesn't come to an end, I'd say by the next quarter, I mean, it's going to be rippling through every stock, and then my theory's out the window. So at that point in time, guys, I think we're really in for a contraction. So that's one way down one of the scenarios down the road. But again, China, brought up the trade tensions as reason for cutting their forecast. The stock dropped from it was 158 all the way down to 144 after hours. Let's take a look at this drop in the currencies. They crashed on that news. So this is the U.S. dollar, Japanese yen. So the dollar went into a free fall against the Japanese yen when that news was announced. So there's just all kinds of turmoil surrounding the trade tensions, the possible implications, the potential dragging out, at worst, dragging out, I guess a compromise is best case scenario. Nobody's going to win this thing. There's no such thing. Everybody's always said from the get-go, nobody ever wins a trade war. And this one looks like it's turning out to be the same way. So get to a compromise. Both sides agree. I think the stock market goes higher because this is a huge weight off of the market. We drag this thing out even more, and stocks start reporting. It starts catching up into a lot more of the earnings forecasts as we move forward, and that's really going to be bad for the market and for the economy. I mean, that's what we're looking at here. So, and then worst case is, we go to complete ass clownery, and both sides are at each other's throats, and this thing goes, spirals way out of control. So, I keep saying I still believe we're going to get the really big rally out of this, but I will tell you, man, it has really got to change quickly. I mean, we are really skirting with some. We are really playing with fire here. All right, S&P's down 33.5 right now. Here are the levels we're watching. So no changes in the levels. You can see how it's operating between these key points. I would like to show you one thing. You guys remember weeks ago I put on a trade in T-Mobile. We're looking for some two-sided action. So this is TMUS today. Here's my trade. It's right into the sweet spot. This thing expires 18 January. I've captured 10% of the trade. Typically, that's the low end of where you want to come out of these trades right here, 10%. That's what you're looking for. I know it's not home run type trades, but this is how you trade non-directional strategies. You take a fraction of the profit potential out. You don't try to shoot for the apex right there. That's stupid. All right, and for me to try to take 25% out of this trade really is pushing the envelope. So 25% would push us at $275 or so. That would put that trade up in this area right here, which is really, really hard to hit. So I will probably take this trade off tomorrow and call it a winner. I need to take some winners off the table, guys. It's been a really, really brutal 3 months. One of the worst I can remember. All right, so what else do we need to talk about? I don't think there is. Let's take a look at NASDAQ's off over 2%, down 138.50. Dow's off 329. Crude's down 54 cents. Russell off 15. Yeah, it just goes on and on. I mean, boy, talking about a trade that I got wrong. Treasury bonds. They do not look like they're going to give up anything at all. They ratcheted higher on the news. Also, a very panicky move in the markets. The currencies, what you saw in Japanese yen, US dollar, was equal to a flash crash in what we experienced back in 2010. That was a panicky move in the currency markets. And until this stuff gets fixed, guys, that's looming over the markets right now, boy, I'll tell you, this stuff's got to get fixed quick. Or this could get really, really ugly, out of hand, way ahead of its time. So, hey, that's really all I have. Just a short video tonight. No trades to watch for tomorrow. There is absolutely nothing to do in this crappy market. I mean, absolutely nothing. So, I will bid you adieu. I'll put a video out tomorrow. I don't expect anything to change tomorrow, guys. I mean, there is nothing going to change in this market until China and the U.S. come to the table and say they've got to compromise on the trade deal, right? And when the Republicans and Democrats get together and say that there is a compromise on the wall, and then we already know what the Fed's going to do. That's going to take care of itself down the road. I'm not worried about the interest rate debacle at all. We've got some major possibilities over in Europe. Deutsche Bank is just getting its hiney handed to it really, really badly. Doesn't look good at all for Deutsche Bank. Lots of trouble. Potential bailout candidate, which it's probably going to rock the market as well if they go down without somebody bailing these guys out beforehand. So I don't care one way or the other what happens. This is if market goes down because Deutsche Bank goes under, nobody recapitalizes it. I'm okay with that. That's capitalism right there. It's the way it should work. So, but we'll see how all this plays out. Interesting times, guys. I don't know if we'll ever see another time period like this in our lives. This is just so unique. All right, that's all I have for tonight. I shall give you a short message tomorrow night. Hope you have a good day tomorrow. Let's just watch the markets, stay in the game. Until next video, this is BA signing out.